All right, so welcome in today. We're going to break down Ethereum and what is happening with liquid staking, also a variety of different staking applications that might make some sense for you guys. We'll dive into all that good stuff. My name is Paul Barrett. Welcome back into Tech Path. Let's get into it. And part of the, I think the success of what we've seen with the crypto market has been the fact that it has maybe detached away from the traditional markets. I don't want to jinx it just yet, but there is a little bit of report on this. This came in from the block, Crypto's correlation with macro events. U.S. equity markets is now weakening. This came from an analyst that looked at a few things on it. Mainly, they were looking at a little bit of the range-bound trading that we've seen with both Bitcoin and Ethereum and a handful of altcoins. If you think about it and look at even Bitcoin's chart, I'll jump over to Bitcoin's chart real quick. You can kind of see this range if you kind of squeeze this down on the 4-hour. What we've seen is a couple of tops there on the 25, but not a lot of major downward movement in this most recent weeks, where we've seen some pretty significant changes with both the Fed's anticipation of maybe a 50 basis points. You've got China coming back into the foray. So there's a lot of things that look to be a little different in terms of how the overall market might play out. So the fact that they've got a little bit of holding is pretty impressive. The crypto market remained range-bound, Bitcoin correcting early in the week and then recovering by weekend to end marginally lower by 3%. We saw this happen. Also, most people are looking for kind of this no man's land, and that's where we are right now. Not a bull, not a bear. And when you see the sentiment data a little later, I'll show you both Bitcoin and Ethereum. You can kind of see how this is playing out. But I think what a lot of people are looking at is, are we going to see some other catalysts that play into this? This gets back into a couple of factors that many analysts are still pointing to, a recession still possibly looming here in the U.S. So that's going to be one to watch. You look at TED Talks, he talks a little bit here about global liquidity projected to rise in 2023. That's a good thing. China, of course, injecting $450 billion, that's right, billion, $500 billion, into money markets during December and January. The U.S. liquidity is somewhat flatlined overall, but has outpaced the Fed QT. So that's also positive. So markets are kind of a product of liquidity and risk appetite. This is something we talk about here. In fact, we have Jeff Ross on. He's my favorite analyst right now. He explains a lot of this about how liquidity, market appetite, especially on risk assets. It's why I think you're seeing this range-bound trading that we've seen on both Ethereum and also on Bitcoin over the past couple of weeks. Sentiment comes in and kind of reiterates what we talk about here all the time, and that is when you think about looking at the markets in general, sentiment is one of the most powerful forces that really drives the next big market move, both on a downward track or on an upward track. Markets in these kind of states are very volatile, and they can be driven very easily into either a pump or a dump based on how sentiment starts to flow out. I want to show a couple of things here. This came over from Watcher Guru, 20%. This kind of surprised me actually, not heavily, but a little bit. 20% of American adults now owning Bitcoin and other crypto assets. Now this is coming from Coinbase. I'll show you some data that might give us a little bit more of understanding why Coinbase is seeing these kind of trends. But if you look at a couple of things they pulled out here, it means that more than 50 million Americans own digital assets. That's big, up probably double digit from as little as 18 months ago when we saw the last bear run, bull run. So I don't know. Interesting though. This doesn't surprise me too much. 36% of them are Gen Z. Millennials constituted 30%. This is pretty tactical of where young and youthful investors are going with their money, and that is more into digital assets. This doesn't surprise me too much. And then you also look at race and ethnicity. This doesn't surprise me either, because if you think about it, when you look at leveling the playing field, this is one of the best opportunities for people who have never been in investing before. It also plays to the strengths, I think, of you don't have to feel like you're getting in bed with the bankers, which I think also goes into certain demographics playing into what we're seeing here with young Americans. Well, this should be worrisome for banks. Banks, I think, are on the bad side of this because this is the future customer base, and it does not look like it's turning around. That is a good thing if you're investing in digital assets. According to 67% of the poll, many of these need significant reforms or perhaps a complete overhaul. Additional 80% of them suggested that the overall global financial system unfairly favors the power interest. Back to the point I was just making. This gets back into, unfortunately, I think a demographic shift in the United States and maybe globally pushing into this. And I think when we see more ethnics and just ethnicity in general getting into these kinds of opportunities, it starts to shift the overall landscape of how and what we might be seeing in traditional financial markets in the coming future. 67% of these Americans also highlighted the importance of having a trusted, secure platform. That goes back to this, just so you guys know, this is Coinbase doing this, so just think about that for a second. They're kind of shilling Coinbase here, so understand your most trusted platform is not an exchange. Let's just get that out in the open. Your most trusted platform is security that you can control, and that's self-custody. So don't fall for these things, guys. Just, get in there, make your trades, and move on. Just to give you an example, this was the data that we're tracking now on the exchanges. We go back and look at data over 90. We did a website visit over the last 30, and you can kind of see right here in January, you had Binance, mostly traffic. But look at Coinbase, rose quite a bit versus right there. That's an active chart going from 21.4 to almost, there it is, 29.6. That's monthly visits. And then if you look back in November on Coinbase, see the difference here? I mean, there's a big shift happening here right now between Coinbase and Binance, which also got Coinbase rated up here on the top ranking right now on sentiment based off of social engagement. OKX came in number 2. This is a big shift away from Bybit, which was kind of the offshore trading platform. So the point is that we're seeing some shifts in the market. I think a lot of this is being driven by a different style of trader and also just the whole idea of self-custody coming into play here. Let's get into ETH, because there's a lot happening here with ETH. Liquid staking replaces DeFi lending as the second largest crypto sector. There's a lot within this article that I think you have to pay attention to here, and I'll explain this further. But liquidity of locked funds is now bigger than decentralized lending and borrowing. You just kind of have to step back and think about that for a second. That's pretty amazing to happen in such a short period of time, where essentially getting the ETH to merge is really kind of the evolution of where all this started, not many months ago. Total value of crypto assets deposited in liquid staking protocol, 14 bill. Monday, making it the second largest crypto market out there. And wow, that was a weird thing. Did you guys hear that? A shift in the sound? That was odd. Okay. And then you've got ETH now staking on accumulated rewards. First time has galvanized investor interest in liquid staking. There's a lot more people interested, obviously. Best performing crypto sector this year, growing in a total value, locked value of about 60%. So I'd love to know if you guys are staking ETH and where you're doing it. Just drop some comments down below and smash the like button if you are staking ETH. We'll talk a little bit about some alternatives as to where you can go, but it's an interesting thing right now. Further in the article says Lido, which controls over 75% of the liquid staking market, offers an annualized percentage rate, a return of 4.8. These are much higher now too. On staked Ether, 6% on staked Solana, 6.3 on Polygon, and so on. You can kind of see a little bit here too to be thinking about. Let me zoom out on that just a second. When you think about ETH, long way to go here still, versus if you look at what's happening with Binance and some of the other tokens out here, even Cardano to a certain extent, Solana almost 70%. So staking ratio, man, ETH has got a long way to go. Again, I think that's also because of size of market. But it has so much use case. That's the other factor. People won't stake if they're utilizing this, whether it's on NFT acquisitions, gaming, whatever it might be, really plays into this. Further into the charts here, if you can kind of see, here's Lido right here. A little bit of growth right here. Here's the FTX collapse. So that was a little bit of the downside. Let me zoom up on that a little bit for you guys. Right there, you can kind of see it, just a hair. That was the collapse right there. And then as you squeeze out a little bit, then you see this uptrend starting to develop right there. And that's not all. Take a look right here at Coinbase. This is wrapped ETH, absolutely exploding there. Again, remember, Coinbase is a little different. They are the ones also that I think will be fighting the SEC to maintain this kind of growth. Because Coinbase, they stake your ETH, they give you a wrapped ETH in exchange, just so you guys understand a little bit more about how that works. Then you have Rocket Pool, which is the one that has absolutely exploded. The thing with Rocket Pool in compared to other staking platforms is they're offering a lot more payout, and they do it with a lot less ETH required. You can do it for like half the amount instead of 32. You can go in with 16, grab a node. And I think it's over 7% now versus like 5 and almost 5.5, I think, with some others that require the 32. So that's why I think we're seeing these kind of growth, obviously, those kind of growth scenarios that are playing into this. Lido Finance activates staking rate limit. This is interesting to me because 150,000 ETH got staked. Now, think about timing here, because you got Shanghai potentially starting to show signs that we might see it. Remember, this could still get delayed. So if you're going to stake, be aware you might get stuck in ETH for a year, just so you know. And maybe you're a long-term holder and that's not a thing, which is great. But 150,000 ETH stake, meaning a lot of people are jumping into this right now. So Liquid Staking Protocol activated a safety feature called staking rate limit after more than 150,000 ETH was staked with the protocol in a single day. Look at this. This is insane. And then you look at what Nansen said. This one right here gets me a little bit questioning what's going on. And if you look at Justin Sun, this is Tron. Just go research Sun, Justin Tron. I don't need to say much. You'll learn a little bit more about it. But he staked over 300,000 ETH. That's $500 billion that went in through Lido from 3 of his wallets. Okay, then to put it in perspective, that's equivalent to 73% of the total ETH staked over in Rocket Pool. So pretty significant here, guys, when you think about the amount of staking that's happening out there in the space. Another one right here, Ethereum Shanghai upgrade, obviously will impact the staking. And so, as I said, and we kind of showed this right here, but ETH was staked as early as 2020. There are concerns that billions worth of cryptocurrency will make their way onto the market. This is the big concern when Shanghai hits. Will people de-stake? I don't think they do it because of the gains that are continuing to benefit. And that's probably going to make it even better because now people can stake a lot easier or feel much easier when you have liquid, kind of like a liquid staking scenario where you can pull in and out. So that's something to be thinking about right there. All nodes, this is a good example right here. All nodes, and I've talked about them before, they're not a sponsor. These guys don't ask us to say anything good about them. Not that I'm going to say anything good about them, but I'm just showing you the comparison. 198 billion right now, 5.7 in APR on the Ethereum 2.0 validator node. So if you did have 32 ETH, the question would be where you stake. Go out and do your homework on the node systems out there. Be aware that Shanghai may get delayed. And if you're okay with both those things, I would recommend cloud hosting over running your own node. And I know a lot of people hate that, but if you understand what slashing means, it's very simple. If you run your own node, you do something wrong, the node goes down, power outage, whatever it is, internet doesn't work, they slash you. In other words, they take away from your normal rewards that you're getting. If you go into cloud hosting, like an All Nodes or others out there, Rocket Pool, many others, then that is basically, they're running it and at 99.9% uptime. So plus you don't have the headache. Now, granted, it's a little less because they take a sliver off that. So that's something to think about as you look at that. Now, here's one that we ran across, and I'm gonna first format this, that this may be a scam. I don't know. What it looks like right now is interesting. Again, not a sponsor. We're just looking at what staking options are out there. This is a project called LSD Protocol. And the idea, this isn't launched yet, but the idea is pretty simple. You would basically stake, liquid stake, so you could pull in and out anytime. But the idea would be that you'd get these LSD tokens in exchange for your reward. So you're not getting ETH back from it. You're getting the LSD tokens, which you could then go sell. Now, if you're a gambling person, you might look at this, and this is the this is the coin market chart right here. Brand new. It's coming down. So you could look at this and say, if there's enough activity here with a liquid stake option to be able to flip out these types of tokens, and then I could sell these tokens in exchange or sell them immediately as I gain rewards, maybe there's an opportunity here for a little market pump on this particular token. I don't know, but we're going to be watching this one pretty closely. It's intriguing to me to see these kind of projects come up, so I wanted to show it to you guys. Again, as I said, not a sponsor, could be a scam. We don't know. Right now, what we're doing is researching a lot of options on ETH staking because we think that's it's a good viable option for you to earn money on your ETH. If you're going to hold it, you might as well get some rewards doing it. Here's the Optimism ecosystem and landscape. We're going to be doing a breakdown on Optimism over on our Diamond Circle. So if you're not part of our Diamond Circle, get in now. Let me pop that open for you guys. Let's go to, I'll show it in a minute. But the point is we're going to have breakdowns on this and amongst many other projects that we do over there. We do additional analysis. We have a podcast over there. Just go to pbn3.substack. You'll get into the Diamond Circle. It's free. You can start there. But the Optimism ecosystem, the landscape, exploding. I mean, this is in crazy high. So as far as growth. Other aspect of this is something that came out from Nansen. They've published their first report on Arbitrum. It presents an overview of some of their whole thing. We've done Arbitrum, and we also have done Treasure DAO, a breakdown on all those over on Diamond Circle. So if you want to explore more and more of those, get those emails, that's where you can grab a bunch of those. Optimism, of course, all of us know, bullish mainly because of the activity on Base, which is the Coinbase platform that is, think of it as like the Binance BUSD of what they're trying to do with Coinbase and create a platform. But the DEX generated almost 203 million in volume over the past 24 hours. A little bit of a weekly jump for 30%. So significantly on the back of the Coinbase announcement, mostly. And that's good. I mean, if you had some optimism, there is a great opportunity for you there. So, there was the reason, obviously, because of this. There's a couple of things behind this, too, that talk about the super chains. This was coming in right here. Optimism announced the super chain, a project that seeks to maximize interoperability and composability between different chains. This, to me, is going to be almost table stakes, but I like the fact that Optimism is advanced enough to where they're going into these kind of strategies, but they're going to integrate these L2s that are siloed into a single base layer. So I know that sound, if you're brand new to crypto and you're listening in this podcast or this video, slow down a minute. Just think about what we're talking about here, and that is Ethereum. Ethereum, does it go up? Does it go down? That's all this video is really about. The reason that you see all these other things, staking, other chains, all that, it's the things that support the ETH ecosystem, which then goes into this whole deflationary model of Ethereum, meaning burning tokens, which means creating value, which means creating price go up. That's how Ethereum is really built. And if you look at all these scenarios and you start getting more advanced in your ETH journey, you'll start to understand these are the signals that help you kind of get in front of a front run opportunity. So that's the main thing to stay aware of when you're listening to these kind of things. Even if you're brand new, if you're an OG and you know what we're talking about all the time, good for you, because these are the things that help you guys kind of understand what's out there. Here was another tweet by Optimism. This was an airdrop, all right? This is another. The total of 11 million OP is going to be distributed. So they continue to pound in on this. This is, again, another big advantage for Ethereum because of the burn that we're talking about getting into ETH overall. And if you look at ultrasound money, I want to go up to just to the top of this real quick. You can continue to see right there, deflationary, right there's baseline. We've fallen well below now 38,000 in terms of burning ETH right now. So consider it in terms of deflationary tokens. The other thing to be aware of here, just so you can kind of stay caught up on this, let me go to here. This is the burn leaderboard. Remember, we've got Blur and OpenSea in basically a blood match. They're going at it with each other, cutting fees, working on, none of it's great for the creator, though it's of the best that you can get. Blur and OpenSea definitely fighting it out. However, Base, which was back to the Optimism and the tie to Coinbase, they were further up on the chart last week. They've dropped down below ETH transfers and Tether, now down to double digits at 85 ETH on the 1 day. This is on the 1 day time frame. If you go over here, I think we can go to the 7 day. There's Blur at the top, OpenSea at number 3, and then you can kind of see Base still holding at about 895. This, I think, was the big pump, obviously. And then there's the 30-day. Base wouldn't be in there because it wasn't around. But there's kind of where Blur blew onto the market. If you look at that, 4,200, yeah, 4,200 ETH versus 9,000 on Uniswap, and then going down back down to the there's the 1 hour, the 1 day, going back down. Uniswap still kind of leading, but Blur right on their heels. All of this is good for Ethereum because it does mean that people are staking it. They believe in the token, meaning you're probably not going to see a lot of exit liquidity. And what does this mean to the price? All right, so let's get into a couple of things here. We'll go to sentiment. I'm going to go to the ETH chart. Again, this was kind of our buying zone. We were liking this range right here. We got a chance to dip in there on ETH as it went under the 1600 mark, and then dipped right back down onto it. We're setting at 1620 right now. And if you look at Ethereum, this is essentially that little bump that we saw on the road last week. And that was basically the precursor to your opportunity to grab right there on Thursday, Friday. If you go back to the chart, that was your opportunity to grab right in here. And that is the difference. So up a little, down, and then of course trending slightly down. But overall, if I'm looking at ETH, it's starting to baseline right here on overall market. So it's not falling too far away on amplification sentiment. You can kind of see amp sentiment right there in the red. And then slightly up on the top line sentiment. So again, not too bad. And that's today's sentiment. If you look at Bitcoin, also just slightly up from Friday. So even though market is a little bit down right now, that is looking at the overall market though. So anyway, we'll take some questions and we'll also take a look at the poll real quick. Let's see what we got there. Would you consider staking your ETH once it becomes easier to unstake? Yes. All right. Well, that's an easy win, I think, for sure. That should have been a harder poll. Come on. The crypto pit has got to do better. We got to get them to come up with really good polls. All right. A couple of questions here. All right. Ace says, Blur just all wash trading between two big NFT traders. Could be the case for sure. I'm going to look into that because if that is, that's an interesting scenario. Why is this not more out there? I have not seen that much news on that. Andrew comes in and says, I lost a fortune staking my ETH. How? If you staked it, you're not out of it, right? Or you got, not sure how that happened. Let me know in the comments. Jen says, SEC has Kraken pay a fee for staking service and a community responds by staking more crypto. Yeah, that's kind of what it works as. And I think that's the scenario, is that you're getting into, back to our earlier part of the video, is the amount of generational shift we're seeing in investing, especially in digital assets, I think is changing the game. I think we're in a state right now between millennials, Zoomers, and also demographics that are going to cause a lot of pain in the traditional markets over the next 5 years. We could see some really interesting things happening in the traditional banks. Believe me, they're not going to go easy into that good night. They're going to fight for that. If anything, they may come into the fray and start to develop maybe some strategies and some products that would be at least competitive in that space. Jerry Crosby says, Paul, thoughts on Binance? You know, Binance, I'm kind of, it's a love-hate. I don't use Binance any longer. Binance US was the one. I just feel, as you saw earlier, I mean, you look at the ranking that let me see if I've got it. Yeah, this right here, Binance US fell to a 7.8 on the overall sentiment ranking. To me, and that used to be in the top 5. And then you have, I mean, it just has not been, I think there's been just enough of the FUD that creates these questionable doubts even if it's not real, the problem is there's got to be some sort of glimmer of possible truth there, so you're always worried about it. That's the concern I have right now with Binance. It's a little bit risky for a U.S. citizens. International, it's a different game for you guys. All right, Poppy Love says, listen to the analysts. We're going to go much lower. I mean, yeah, there could be. I mean, if we get, we've got an analyst coming on maybe this week that is very bearish right now and still feels that there's a big opportunity. And I'm not saying that there isn't. We do think that there is an opportunity for a mid-year problem. And this is something you guys have heard me say many times, is I still was looking at and still am looking at end of year before we start to see some relief. Is this a relief rally that we're seeing so far? Maybe. And do we see adjustments down? Remember, staking is a long-term thing. So most of these kind of cycles don't even bother you because you're looking at probably selling your ETH in the next bull run. That's a completely different strategy than most people if you're trading in and out of ETH right now. Do you think no, not very many people have 32 ETH at all. That's the issue. That's why you're seeing so many people that are staking with things like Rocket Pool and others where you can still stake, or Coinbase. You can still stake, get a certain, you just don't, the 32 ETH goes for those players that are out there looking for the maximum return when they know they're going to hold ETH long term. That's really the but there's a lot of those big whales out there. That's a good thing for ETH too, because the more of those that are in there, the more security you have about transactions as well as volatility. All right, so there should not be a time attached to staking, especially in bull. Yeah, I think, the thing there is it's a strategy. It's built into the chain. The concept is real. I have a problem with it, as far as staking in general. I use it. I like it. In a lot of ways, it's much like the traditional markets if you had a CD, okay? There's banks out there offering 18-month, 24-month CDs at 4, 5, 6%. Those are pretty equivalent if you think about it. Hey, I'm not going to sell my dollars for 18 months. I'm willing to go out and get a 5%. It's almost the same thing, a lot less volatility, but it is locked up. Think of it that way. Much like a CD, it's locked up. You can't touch it. The question is, do you think ETH will rise on the next bull market? If you think that, then you have your answer, I think. All right, guys. If, as I said, you're not in the Diamond Circle, get in. It's really easy. And the cool thing there, as I said, we've got a podcast over there that is only available in Diamond Circle. We also do a ton of stuff over there for the CPI. If you want kind of a handheld experience where we walk you through analysis, you can get that over on the Diamond Circle Plus program. It's pretty easy if you're not interested in looking at charts and all that kind of stuff. If you want to reach me, it's very simple. Reach me out on Twitter. It's @PaulBaron. We'll catch you next time right here on TechBath.